For some of the biggest stories in the markets, we welcome in Renita Young, senior markets correspondent here on the TV Ameritrade Network. More tech layoffs to speak of. In this case now, we're talking about Zoom. What's the latest there?
Well, Zoom shares are actually taking this news quite well. The company decided to lay off about 15% of its workers. That amounts to a little bit more than 1,300 people. And it's layoffs because of all the tech companies that really need to pare down on their spending. They're finding ways to cut costs, but that's not the only thing that Zoom is doing. The CEO has agreed to take a 98% pay cut in the next fiscal year, as well as forego his quarterly bonus. Members of the executive leadership team are also foregoing their corporate bonuses as well for the full year of 2023. And the company is adapting to this uncertainty of the global economy. And as the CEO says, also its effect on customers. And so it was a pandemic darling, of course we know. Added new features, added a lot of new staff, and the company admits, the CEO, that they didn't correctly analyze the teams or assess if they needed to scale up so far. And also the company is looking to make other cuts as well. So some of its peers, we learned yesterday, Dell is letting go of 6,650 people in January, Google 12,000, Microsoft 10,000 people, and Salesforce is laying 7,000 people off of their workforce.
Yeah, I see this chart. This is a short-term chart here. I was just looking at a longer term. And while it looked good for a year to date, right, you say, oh, wow, year to date it's up 20%, but 1 year down over 40% still. So Zoom Video's shareholders still waiting for some good returns. How about Bed Bath & Beyond? Now, we know this has been under significant pressure overall. Tell me about the new stock offering.
You know, Bed Bath & Beyond has been under pressure really for years, and it's now issuing a Hail Mary offering, hoping that it'll be able to get the funding that it needs so that it won't have to file bankruptcy. That funding will amount to a little bit more than $1 billion infused into the company. And Bed Bath & Beyond was also downgraded at Wedbush after sharing these plans. The analyst took this stock from $1 a share to $0 a share, keeping it at underperform. I'm sure if there was a rating below underperform that this analyst might have chosen it. But Bed Bath & Beyond also secured within that package, it was $100 million from Sixth Street Partners, that's one of its lenders. And they're going to use the cash to pay off some of the debts after defaulting on a JP Morgan loan last month and missing a $25 million interest payment on February 1st. And whatever is left over will go toward a hopeful turnaround of the business. But if this deal does not work out, the company could still file for bankruptcy and it would have to have its assets liquidated.
Yeah, I mean, this $1 billion offering just trying to convince investors and folks that they can avoid bankruptcy, but it's tough. It's in a very difficult position, no doubt. Renita Young, thank you so much. Good luck at two important names.